Well, good afternoon and welcome to the Options Hunter. My name's Steve Hill of the Options Hunter. Dale Wheatley, our founder and our chief architect, is in here as well. This session, we're probably going to run about 30 minutes. I wanted to give a bit of background for both new folks and for folks who have seen what we do before. Primarily for the folks who we've had as clients before or thinking coming back. Going to introduce you to the change in the service levels that we introduced about 3 weeks ago. And for new clients, I'll give you a quick rundown of what it is that we do here at the Options Hunter. Dale's been trading options in a very strategic and unique way for probably 30 plus years. I think it's been over 30 years since I first met Dale. The Options Hunter service itself has been in existence for over 20 years. And primarily, we use one specific set of strategies for trading out of the money options. And this strategy will run through just briefly what that is. And we provide this strategy to you as a learning educational service that is delivered both through webinars and through nightly updates. We also have tutorial videos that are part of it. And we provide both live sessions with Dale once a week. And depending on your level of service, 2 of those a month are actually during market hours themselves. Everything we do as far as nightly updates and live sessions are all recorded. If you can't make a live session while you're learning this strategy, and then you can always go and see the recording later. As part of the new service levels, I'll introduce to you what it is that we provide at each of the 2 services that we are currently offering within the Options Hunter. So many of you have already been to this new website, theoptionshunter.com, and the homepage is also offering access to our TriFusion strategy workbook. If you haven't already clicked this link and got that workbook, I suggest you go ahead and get that. It's a really powerful book. It explains with real-life examples how this strategy works in action. The services themselves, as I was saying, are delivered primarily through Zoom. You can follow along with your own trading platform. You don't need any specific trading platform. This is a strategy. Dale uses Think or Swim as his preferred platform for delivering all of the live presentations and all of the nightly updates. So you can follow along that way. Or if you have your own trading platform, as many of you do, you can set up the MACD indicator, which is our core indicator within the system itself, whatever platform that may be. We trade, we look for trades, we look for setups, we look through both end of day and quite a bit of real time. So if you only have delayed data, that's probably not going to work as a trading strategy. But you can trade with this system over monthly, weekly, daily time frames, hourly, 30, 20, 15, 10, 5, and 2. Shorter the time frame, so quicker the trade is going to be, the more nimble you're going to need to be. So there's a little bit of background. Let me just give you an idea of the elements within the services themselves. There are 4 key areas. I'm just going to go down here so you can see this on the screen here. MACD is our main indicator. The settings in MACD are the Gerald Appel's default settings, so there's nothing changed there. We won't go deep into that area. MACD is a crossover indicator, is also a divergence indicator. We like the crossover, we like the divergence. Divergence is very important to what Dale teaches. It's a divergence from price action. Now, MACD diverges from price action all the time. I did a session for a group of traders recently on that. What Dale teaches and what is different here is we look for a price pattern as well. So that's the second key area, is identifying price patterns, tops and bottoms, that have those topping areas, double tops, double bottoms, with a divergence on MACD. And it's got to be clarity. It's got to have clarity in the pattern itself. It's got to look like a good double top and double bottom. And it's got to have that clear divergence to give us our initial leaping off point. The next area we look at, that Dale looks at, is time frames. If you're just looking at one time frame in isolation, you're just not getting enough information because lower time frames feed the upper time frames. So we look for multiple time frames, and this is part of the knowledge set that you can learn by joining these services, is we look at multiple time frames. We're looking for divergences, we're looking for confirmation. And it could be a re-entry point from already you've had a pattern occur. But it can also be you don't want to see something that's diverging on a higher time frame that's just above the time frame you've seen a pattern emerging. So there's some finessing that goes on in looking at multiple time frames. In our recent services, Dale has been focusing a great deal on an ETF, a leveraged ETF that he uses as a surrogate for volatility, because volatility is key for us. Volatility in options trading is key. You've got to have volatility. And as part of this service, you will learn how to use both volatility itself as a trading instrument, but as a key-off point for finding trades in SPY, IWM, the Qs, and other market ETFs. ETFs is where we focus a lot of attention. Not to say we don't look at stock options as well, but there's just a huge amount of options and high liquidity available in many of these market ETFs. And the other key thing is we're buying out of the money options below a very specific price. So that requires getting in and out of an option fairly quickly, and we want low time premiums, and we want the expiration ideally to be the same day, and that also plays into those highly traded ETFs. All of those ones I just mentioned have expirations every day of the week. Some of them have weeklies that we can look at too, but then there's there's a time element built into the premium of the options, even those under 10 cents. So that's a little bit of background there of the service levels that we offer here. If you join either the service levels, which I'll explain what you get in a moment, you will have access to live webinar, usually between an hour and 2 hours every Tuesday. You'll get nightly updates 4 times a week, and you'll get a host of other add-on bonuses that I'll show you in a moment. So first off, let me just explain the 2 service levels. We have TriFusion Basic and we have TriFusion Plus. So let me show you these service levels in our services area so you can see them. So the 2 service levels are TriFusion Basic and TriFusion Plus. TriFusion Basic gets you access to the recordings, and you get the live evening webinar once a week. So you get all of that. Everything's recorded. The same. You get nightly updates, and you also get our TriFusion Workbook, Physics of the Market, a video that's 50 minutes long, includes Dale's explanation of how, like Newtonian mechanics of the market, how that really works and is critical to understanding how to trade this strategy. That's the TriFusion Basic. TriFusion Plus has everything that's in Basic, but also includes 4 nightly video updates a week. You get them emailed to you, and they're also within your members area within the service. You also get a live market hours webinar twice a month. So the way this works is that in the Basic service, you only get 2 live webinars a month, whereas in the Plus service, you get 4. And those 2 additional live webinars are during market hours. So it starts at 2 p.m. Eastern time and runs for about an hour or so on each of those. Every other Tuesday is how that works. You also get with TriFusion Plus a 30-minute one-on-one call with Dale. You book that, and Dale will give you a run through and ask you a couple of questions. Wants to find out, where you are trading wise, and if you have any questions about the service itself and the strategy. TriFusion Plus also includes a Fed Watch. We had one today, just a few hours ago, because it was Fed announcement day. Most of the Fed announcements during the year, not every single one, but most of them. For example, this year we've had 2 already where we've had live sessions at around about 1:30 Eastern, just prior to the Fed announcements, where we're looking to see what the market reaction is to those Fed announcements, because there's often an uptick in volatility. or there's a swing in one direction or another, depending on what's going on with the market itself. So that's the key difference between the two service levels. The service levels yourself are month to month. You just join month to month. You can switch off anytime you want to, and you can come back anytime you want to. So those service levels are out there. Let me just show you what happens when you join the Options Hunter services. You get access, you log into your library, and within here, you'll have access to all of the key components. So for example, if you're on TriFusion Plus, our top service, you get access to our FedWatch and the recording of that. So that's all in your library there. These are other things that you can sign up for. That's live trading that was back in last year. But this is one of the bi-weekly live webinar and recordings, the 7 p.m. ones. So when you go into here, you see exactly what date the next session is. So for example, bi-weekly webinar, 7 p.m. And there's the dates that are coming up. And here's how you join that live webinar. Or every other Tuesday, of course, it switches to the 2 p.m. ones. And you can see those dates in there. And there's the link to the webinar itself. So that's the easiest way you join the service. I'm sure a couple of members are also in here. That's how you get access to all of these areas. Included in here, of course, as I was mentioning, are the nightly updates. So look at March here. Here are the March updates, the nightly updates that Dale has done. Each of these is a streaming archive. You have 2 years of history of all of these archives accessible for you when you join the Options Hunter. Physics on the Market video. This is also part of joining the services. 54-minute long videos, a very powerful video, explains how the physics of the market drives those changes in the direction that we look for. So that's the library area. When you join the service, that's exactly what you get.
Okay.
Yeah, share your screen and just tell us a little bit about what you do for the next sort of 15 minutes, and we'll try and answer some questions.
Okay. Thanks for the intro, Steve. And everything you said was correct. I always like to double check that because I'm a stickler for being correct on things.
Well, thank you.
You have to be correct if you're going to trade options the way I trade options. It's not quite like anybody else trades options. So if you're looking to see something that is the traditional methods, you came to the wrong place. And I've been trading options now for about close to 40 years. I've been 1987 or so. It had been pretty close to 40 years. That's a long time, makes you tired when you think about it. But when the markets started out and back in the day, and everything was trading in fractions and all that kind of stuff, and there was no liquidity in options, even the index options, the SPX and stuff like that just didn't have liquidity like we need. And we certainly didn't have any access to any real-time information. That was non-existent because the internet was pretty much non-existent. Because I remember having to update databases full of stocks, not really quite knowing what I was looking for, and then had to fix all the data in there. That was when you had to dial up by phone. Nothing was free, no 800 numbers to dial up on. Had to dial up after 11 o'clock at night so you get the cheap rate. To dial up to get something that you weren't even sure was going to be valid. And yet I stayed up day and night and day, and for a long time to try to get this thing hammered out. And I finally did recognize a pattern that was consistently reliable. So I always wondered if people are looking to make money trading options specifically, what would they need to do? I looked at the stocks and the most heavily traded stocks. Well, good. good, okay, great. But they all seem to have patterns that were so different from each other. And then I figured out later on that groups of stocks that were in the same group, like banking stocks or oil stocks or commodities and stuff like that, they all have a tendency to run together. Okay, well, that's a good thing to know, I guess. And maybe commodities were affected by the price of the U.S. dollar. So if the U.S. dollar's down, generally commodity prices are up, and da 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 da. And that's a lot of information that you have to absorb to be able to get a handle on how things work. But then it wasn't enough. I thought, oh man, all this work and is still not enough. It's just so I've tried to narrow the field down away from looking at stock options specifically, except for I look at the individual stocks like, say, Meta and Amazon and Tesla and stuff like that, just to kind of gauge what's going on. If they're getting ready to move, then it's probably likely that the market indexes are getting ready to move too. So I take a look at how the market indexes move, and specifically, I found an uncanny re, comparison between volatility, the VIX or the VXX or whichever one you want to use. They're all the same. So look at the VXX index, and I'm looking specifically for a pattern to emerge in this picture somewhere. Last one was yesterday when the price, you see, this is the price up here, when the price was almost at the same top, but the technicals were not at the top. So that means that volatility is going to be sliding to the downside. And as a result of that, the market indexes will move to the upside. And that's really all I need to know. But I'd really like to see a cleaner pattern than this, because this is like above the signal line, the red line there. So this is above it, and I'd rather see it below it. And I have some specific formulas that I'm looking to adhere to, so that I don't make any mistakes, so that every single trade can be a successful one, not just for me, but for all the people I teach. And people get frustrated oftentimes because they're thinking, well, this is a trading class, right? Said, yeah. Well, why aren't we doing any trading? Well, we're looking for the ingredients that I outlined. That's the primary reason, because if you try to trade and it doesn't have a pattern, what happens is the market may move in the direction you think, and then all of a sudden it reverses itself. So when you have a clear cut divergence on the volatility, specifically low time frames, that's a pretty good pattern. This one here is a better pattern than this one. See, this is the opposite direction, upside. Notice that the price here is lower, but the technicals are higher, and they're clearly above the signal line, whereas this one was wishy-washy, and it was kind of at the signal line, kind of below it, kind of above it, so not quite as clear a signal as this one here. And that showed upside in volatility, which means downside in the market, and this translated to about 1,000 or 1,200% return on index options, on the SPY and the Qs and the Russell 2000 and what have you, like that. But we've seen many times that we have patterns that are similar in the features with which this has, but on a higher time frame, leading to more longevity in the moves. So when you have a longer term pattern and it has a nice picture to it, then you can feel confident that you can trade something that will last for a longer period of time. For instance, like I say, the 2 hour chart, but it's really not just a 2 hour. I want to show you something that's a little more of the ingredients that I'm looking for. But this one is pretty close. This is on February 20th, the date right up here, the February 20th. Notice how the price is at a new low over here, but the technicals are far from it. The low on the technical picture on the MACD indicator was way back in January, and this was in February. See, so nearly a month had elapsed between the two. But when the price came back down and retested the low, the technical level was much higher than it was before. And as a result of that, that's led to this move that we've seen here now that has been taking place for the last 3 weeks or so, right? That's about that's almost a month, from February 20th to today's March 19th. So about a month, and volatility has moved steadily to the upside according to the pattern. So that would mean that the markets have moved steadily to the downside. And has that been true or not been true? Yeah, that's been true. That was also the same kind of a pattern in reverse. Notice that volatility has the technical high point was back on January 24th, and it hem-hawed around, did nothing pretty much, and then it hit another high point in price, much higher than it was, but lower on the technical picture. See, much lower, in fact. So as a result of that, and the fact that volatility was increasing, that led to the market meltdown. And there's been subsequently numerous patterns that have evolved that have the same ingredients technically that the 4 hour chart or whatever has, or I'm looking for the highest time frame that has the ingredients. So, if it's a daily chart, well, I can't really tell. I'm on the daily chart, but the 4 hour chart's nice, and the 2 hour chart, and the subsequent, turn down on it, and the technicals are turning down. So that's led to a nice move to the upside. And then in the last couple of days here, notice that, let's see if I can get this pattern so it makes a little more sense, a little more. Move this thing out of the way here somewhere. And you all see this where I'm widening it out a little bit now. This picture here, see, this is a 2 hour chart, so it has a substantial impact on how the markets will move. And this is the price, again, on the top part of it. I'm looking for a V-shaped configuration, a price that hits the bottom, then moves up right after that, and then moves back down and retests the same price or lower, but leaves the MACD indicator higher. And that is what constitutes a good reversal and something you could sink your teeth into. So this was on the 13th, and that first move lasted until the 17th. See, so that's a 4-day move. So you don't have to be a day trader when you look at high time frames like that. It's only low time frames, which oftentimes is the case. So that's why I ended up trading during the day, what things that expire at the end of the day. You may only hold the option for an hour or less, or 2 hours or something like that, but they have every bit the same kind of impact that a 2-hour chart would have, just on a lower time frame. So meaning the move itself will be shorter lived. But for this kind of a pattern like this is something that almost anybody could take advantage of, whether you're working or otherwise engaged for the day or something like that. You could take advantage of this and see a nice return on your money just at one time, and you don't have to worry about what happens after that. Like all this kind of stuff, fine and good, yep, but doesn't have anything to do with you. So if you're looking for a nice pattern, you're looking for something like this on a long-term chart. So that's not only true with the SPY, but isn't it ironic? Or is it? See, that the Qs had the exact same pattern, only looks like it's a little cleaner, wouldn't you think? Like this is clearly above the signal line and nice pattern, and it did the same essential move, you know, that ended on the 17th, essentially the same time, right? That's right. That's what we're looking for. And IWM. See? Now, explain to me how 500 stocks of the S&P 500, along with 100 stocks in the NASDAQ 100, along with 2,000 stocks on the Russell 2000, can all show collectively the same pattern at the same time. Doesn't something seem odd there? Well, it may be odd, but it's substantial. Just as an example, I'll just show you maybe briefly just the options, how options move. See, go low of 15 cents. I'm only interested in trading things under a dime. I just look for the 205. But it went from 15 cents to $1.07. So that was something, right? It beats working for a living. And let's see, the QQQ. This was 466 at the bottom. So that's when you want to buy the options, call options, provided volatility is showing the reverse. And they moved to 485 in the next couple of days. So this is for longer term traders who don't have the time to devote to watching the market and its gyrations all the time. You know, just paying attention to the chart of one thing. Well, you can, you can see that the options were about, oh, they're pennies. So, and this was on expiration day, but they were also cheap back here, you know, not as cheap as I want to see. I'm looking for under 10 cents. But on this day here on the 17th, they moved from just pennies up to $1.18 or $1.20, just like that in short order. So in order to see what those are going to do in the near term and what that did, why that did it in the near term, you'd have to look at the low time frames, you know. So but here to here, nice move, and see when the technical picture changed here on the day after on the 14th, then you could be done with that. So depending on the day that you pick the options, there's time value associated with it. So for options that are out 3 or 4 days, you pay a great deal for time value. So the options will not move nearly as quickly as ones that are 0 days till expiration, meaning the same day. So essentially, that would constitute a day trade, but I am not a so-called day trader. I'm a pattern trader. So whichever time frame the pattern shows up on, that dictates whether I will trade during the day for options that expire that same day or longer term, if you understand what I mean by that. See, so if I look at something like today's activities, like this is what the market was first thing this morning is like basically diverging, but not strongly. So it's not a clear pattern, but it shows that has an upside bias to it. So it wants to swing the options and the price of the index up. So it's not something that I would generally get involved with because it's not a clear pattern. If this is a double bottom with like this one was over here, see, it had a double bottom with a concrete, solidly defined upside divergence on the MACD, then that's an absolute positive return you're going to have. But this one here is a little sketchy. So I don't know. It means it could move up and move down and move up and move down. And that's exactly what it did during the day today. So making it very difficult for you or me as a trader to focus and pay attention to what's going on and to have the confidence factor, which is what I look for. So I'm not just interested in trading just for the sake of trading, and certainly not interested in being a day trader for the sake of being a day trader. I'm looking for a pattern, and if a pattern is clear, then I'll trade it. And if it's not clear, I don't trade it. I don't care what the day is. You can go for 3 weeks without seeing a good pattern, or it could be one after the other. You know, when we did the last class we had, there was a 5-day class. There was the patterns occurred with real regularity, like every other day. You know, we had 1,000% return, or 10,000, or 5,000%. And during the course of just that 1 week of trading, there were 2 opportunities for the S&P 500 or the Qs or the Russell 2000 to make 12,000% return on 2 separate occasions. That is 120 times your money within a couple of hours. That is what we're really talking about, and really making some serious return on your money. But these kind of things like this, it might make 3 or 4 or 5 times your money. It's really, even though you think 3 or 4 times your money, oh, that's great. For me, that's not great. That's not even something that, for the most part, I have any interest in. If it's only 3 or 4 or 5 times your money, that is really something that puts me to sleep. Doesn't energize me in any way, shape, or form. So you have a one or two Tuesdays out of each month. So every other Tuesday will be live trading hours from 2 to 4. And then it won't have the regular class at 7 because it already went over the thing from 2 to 4. See, and then every other Tuesday other than that, then I just have a normal 7 o'clock update, or regular class, and you can ask questions or whatever it is. This kind of trading is really totally different But like I've explained to Steve and everybody else, by far, I mean, not just a little bit better, this is by far the most powerful trading tool that I have ever seen in the 40 years that I have been around the markets and trading. Nothing even comes close to this. Nothing. Even in a lackluster day, you know, like today was like, I don't know, 500 or 600% return or whatever on the options, and that's not even anything I have any interest in. You got to figure, what do you mean you don't have any interest? Oh, that's right. I don't have any interest in it in 5 or 6 times the money, because the pattern you see like today, it's a little sketchy. Like it basically looks like it's going to move to the upside. Okay, well, then it basically looks all right. Basically, I'm not interested in basics. I'm looking at something specific. I want to make sure it has the ingredients on the pattern to make the trade every single time. And every single time I make it, I will make money, and I will be able to compound my money, something unheard of in the options arena. How'd you make today? So I made 10 times my money. Okay, well that's really good. So you started with $1,000, you turned it into $10,000. So that's a good profit, right? I mean, anybody would think that's pretty good profit. But have you ever tried compounding your money? What if you took the 10,000 on the very next trade that has a pattern like this one? See, V-shaped pattern, double bottom price, upside divergence, clearly and decisively above the signal line. You see what I'm saying? And you invest the whole $10,000, not holding anything back. Then you turn the $10,000 into 100,000. That's just an example, but it's actually be more than that, because this one wouldn't have been 10 times your money. Maybe it would have been 50 or 100 times your money on the first trade. So you turn your $1,000 into 100,000, like we did in the last 5 days class we did. We're turned it into 120,000 twice. But that's only if you started with $1,000 each time. That'd be 120,000, then another 120,000. So you got 240,000 on those 2 trades. But if you compounded, it would be 120 times 120. Now we're talking big money. What's that? 120 times 120? Well, let's see. You want to become a millionaire quickly? That's how you do it. So you wonder why I have such impatience and why I'm not willing to trade everything all the time. I'm only looking for specific ingredients. And that way I know I can be comfortable and I can be confident in what I'm trading. But not only that, I'm adding an incredible amount of integrity to what I'm doing. And what most people would think of as illogical, unreasonable, and fantastic, and stupid, or whatever adjectives they use, they're all wrong, because actually the things that have the most clearly defined patterns are by far the most powerful. See, it doesn't make any sense, does it? Why would something like this be more powerful and create a better return and do it with confidence better than something like this over here? What is this kind of a pattern? That's not quite a double bottom. Okay, well, it's kind of close, but it's not. Well, yeah. So what? If it doesn't have the ingredients like this that I'm looking for, then I'm not interested. You see what I'm saying? So if the pattern that creates 120 times your money, or 200 or 400 times your money, whatever it is, I've seen numerous times this year that it's already done that. So on the major indexes. So there's no reason to look anywhere else. No reason to look at individual stocks. So what Meta and Amazon, what they move, and Tesla, who cares what it does? They're just components of the indexes. You see how the indexes all move together. Today was the same way. They all moved together. Well, think individual stocks didn't move with them? They did. So, but they don't have expiration today. They don't have expiration until Friday. So you're paying for 2 days of time value premium that you don't otherwise need. See, so the move up today was nice, but it ended here at like 3 o'clock. So it started at 2:30 and ended at 3 o'clock. So that, it didn't even have a good pattern associated with it. Maybe the markets closed higher, but that doesn't mean that the options did. See, so when I look at the options associated with the indexes, I have to make sure that they have a fair and equitable value associated with them. If I'm looking at options that are $10 or $15 out of the money, and I don't even have a chart pattern that says it will actually make it to that area, and they want 50 cents for the options, I'd say forget it. You see? But if they want 2 cents or 3 cents for it, something that's only $4 or $5 out of the money, then I'd say buy it. You see what I'm saying? So it's just getting used to that kind of a thing and getting used to looking for the ingredients and the patterns. So this is on the 13th, and all the indexes essentially had the same thing. UVXY should have had the reverse pattern like this. So on the same time frame, wasn't quite a double top on it. So it's a little bit, iffy on that part. But the indexes themselves all had the same ingredients. And when the indexes have the same ingredients and volatility is weakening or strengthening, other way, but in this case, if it's weakening and it shows that it, like, see, see, 10-minute chart. See, well, whatever it is. Trying to show you the volatility. But it's not quite the same ingredients, but it is weakening and it supports the idea of strengthening. But ideally, when you get the volatility and the markets to show the same thing, only in reverse, or you can use short volatility if you're not comfortable using something that you have to see the reverse of it. You can use the short VIX. So it would move in the same direction as the markets. So if you see short volatility, so it has almost a perfect double bottom here and a higher technical pattern, then that means the markets will also move up. So whichever's easiest for you. There's all kinds of ticker symbols these days that make it easy to trade. And if in a case like today, if it's not showing clarity for a market move up with quality, so you can buy options comfortably, or if the options are overpriced, well, and you don't want to miss out on the move, then you can buy the indexes or the leverage indexes like the SPXL or the TQQQ, like this. And it makes a move from like 60 to 63 or something like. I mean, it's nothing like options, but at least you get some of the move out of it, and even it closed at 62 something, but it's still, something, but if you bought it down when it was showing a divergence, that it was at 59 and then it moved to 60, or about. So it was still a pretty good move. But what I have trouble with when I look at these indexes and short and the short indexes or the long indexes that are leveraged like this, well, you have to know the same ingredients technically to trade the indexes and to trade them effectively as you do for trading options. So why not just wait? Maybe you're not going to get the move that you could have made. Okay, well, so because when you see moves that are in the multi-hundred, multi-thousand% range, and it does it with regularity, you won't need to ever look back. You learn to compound your money and do it with consistency and reliability and confidence. That's the key factor. It's not like other kind of options trading. Well, I'm gonna show you. This is a good pattern here. What most people don't look for a pattern. I don't know what I'm talking about. So most people have no idea what they're looking for. They just think, well, I think we should buy the Apple, 265 calls, and if they're $1.25, just go ahead and pay for it. What? No, I've always been consistent. I've always said buy options cheaply. And the technical pattern has to be a strong technical pattern to warrant buying cheap options like that. It's like a jack in a box. The physics of it is like you push the price down like you do the jack in a box, and you wind the handle up. And when you wind the handle up, it's getting ready to pop, and it pops at a quick pace every single time when you see that kind of a pattern. So you can wait. You can afford to wait. I can assure you. I've done it many times, and I can assure you, you can afford to wait, even though you don't think that's true. That is true, because you turn $100 into $1,000, and then you turn 1,000 into 10,000, 10,000 into 100,000, 100,000 into 1,000,000, and that's only making 10 times your money each time.
Yeah, it was a good one. Right. Well, I think I appreciate all the questions and appreciate everybody who was in here today. And we'll look forward to seeing you in another session soon. Thanks again, Dale, for joining us.
All right. Thank you.
Okay. See ya.
Thanks, everybody.
Bye.